Welcome to The Real in Real Estate, your gateway to the source. I'm so glad you're here. We're all about diving into the nitty-gritty of real estate, sharing insights, tips, and some awesome interviews straight from the industry's beating heart. From the latest trends to cool investment strategies, we've got you covered. Let's explore and uncover all the essential tools and knowledge you need for navigating the ever-evolving world of property and housing. Here we go. Welcome to another episode of The Real in Real Estate. Today we have Karen Wood with us, and she's a lender. I'm going to read her bio for you real quick here. Karen has over 20 years in the industry in various production and operation roles. I know she doesn't look old enough to have 20 years, but she does. She has a solid working knowledge of a wide variety of loan programs and understanding of the ebb and flow of underwriting guidelines. Karen's dedication to helping clients understand the mortgage process and the reason we do the things that we do is what helps folks feel confident at the closing table, that's for sure. All questions are valid and no concern is too minor. The knowledge that she brings adds comfort and confidence in the decision-making process. So welcome, Karen.
Thanks. Hi.
Hi. Now, Karen, you're with Next Mortgage, is that correct?
Yes, that's correct.
And the reason I have you on the podcast is because you have some very unusual or less well-known products out there for people that could really, really use them. I think they're just fascinating, and I wanted you to explain them because I could not do as good a job explaining them as you. So
Yeah,
I know
of
you
course.
have a program called Home Funded. Do you want to start with that one?
Yeah, home funded. Well, first, I just want to say that these are not necessarily all of the underwriting guidelines and criteria. We're just going to do a super high level overview.
Yes.
So if you have questions, feel free to reach out and we will go into more detail. But Home Funded is our online gifting platform. It's basically a way for people to create a campaign page and get donations from friends, family members, teammates, church members, everybody and anybody who wants to help them be able to save for a house. It's kind of like crowdsourcing for your down payment and closing costs. Anybody can do it. Anybody can donate. You can donate with debit card, credit card. And it's pretty unique and awesome program, I think.
So this is not the same as gifting money like a parent would do to a child, correct?
No, it's a little bit more unique. So traditional gifting, it has to be a family member. We have to document the transfer of funds. With Home Funded, it's literally a campaign page on a website and anybody can donate to it. So you create this campaign page and you share it with friends and family, whoever your sphere of influence is. And literally anybody can donate to it. And they just go online and they make a donation just like they would for a GoFundMe or any other crowdsourcing platform. And then all that money just adds up and helps you save for your down payment.
So she's hoping, she being whoever does Home Funded is hoping that their friends and family will share it also to bring
Correct.
in.
There are ways to earn extra money, which are given in the form of a lender credit. Each of these shares generates $10 more of a lender credit that you can earn. So if you go and you share it online, then you earn $10 in lender credit. If your friends share it online, let's say 2 more friends share it online, then you can earn another $20 in a lender credit. So it just kind of compounds and builds the more you share it and the more you get the word out there. So not only are you getting the word out there and hoping that more people will donate, but by sharing it, you're earning more for yourself.
Wow, that's amazing. So it's kind of a lender contribution, or it's not a matching program, but it's a contribution program. That's amazing.
Correct. But we do also have, for first-time home buyers, we have the added benefit of a lender contribution. It's kind of a match. It's up to $2,000 or 1% of the loan amount, whatever's lower. So for every dollar you earn for first-time home buyers, we match that $2, $2 to $1. So
Wow.
let's say you've earned 1,000. Well, we'll match it to 2,000. So as soon as you earn your first 1,000, you automatically get 3.
I like those numbers.
Mm-hmm.
I think the meeting I was in, an example was given. There's a young single mother with a young child trying to get her first home, get out of the apartment living, renting, and actually have equity in something. And I thought that was so amazing because she can send that to friends and family, who sends it out to friends and family, and she's building up the money she needs in order to make that down payment. Now, let me ask you this. What if she gets more money than she needs for a down payment? What happens then?
Then she gets new furniture or new
Ah,
paint
that's
or
amazing.
celebratory lunch. So once the money is gifted, if you raise more than you need, it's just like any other donation platform, that's your money. So
Okay.
if you get enough to get your down payment and your closing costs and have some left over, then yeah, you can buy furniture.
Was there a time limit on this collection process, or is
Yeah.
you just go until you have enough money?
Yep, you can set it, kind of set it and forget it. Basically, anybody can set it up at any time and they can just let it run for however long it needs to. A lot of people do this also for their weddings. Like instead of doing a traditional registry, they'll set it up when they get engaged and then they can kind of use it, leave it running until they get married or after. People do it also for their kids as they're graduating college.
Oh, that's a great idea.
Yeah, so you can like set it up when they start college and then have people contribute for birthdays and Christmases if they want to instead. And then of course, graduation presents at the end. And yeah, you can let it run for years if you need to. I mean, that's not the goal, but
Yeah, right. But well, I didn't know. But yeah, no, you're absolutely right. And I think that's excellent too for weddings. I
Mhm.
mean, how perfect is that? That's you're giving the couple a house basically instead of pots and pans,
Yeah,
which
because everybody has pots and pans
yeah, exactly.
now.
Yeah, it's very likely they already had that anyway. Yeah.
Yeah.
That's amazing. That's fantastic. So there's no age limit. You could start someone in college.
hmm I mean, theoretically, you could start someone younger than that, but realistically,
Yeah.
probably we won't be working. I mean, hopefully we won't be working by the time they're old enough to buy a home. But yeah, you could start somebody as soon as they graduate high school, even. And then all their graduation money could theoretically go in there. They
Absolutely.
were okay with that. And then, as they go through college, they could continue to get more, until they graduate. So,
So let me ask you this, where does this money go? Because I'd hate for my teenager who's just started college to take it out for a party or something like that. Who's keeping the money as it comes in?
totally fair. So the money is held by merchant bank, and you don't have access to it until you bank it. Um, Once it is banked, that is their money, but you know, the likelihood of that happening is fairly slim to none. But once it's donated, it is donated.
It's donated. Okay.
Yeah.
Well, hopefully we would know the person well enough to know they're going to do the right thing when we
Yes.
donate.
Yes. Yeah.
So how long has this program been around?
Since
Approximately.
October 2017.
Oh, wow. Well, anything else about this program that we haven't talked about already? I don't want to forget anything.
Okay, so yes, this is not limited to first-time homebuyers. You don't have to be a first-time
Okay.
homebuyer to use it. Each maximum contribution from each individual donor is capped out at $5,000. You can do it, like I said, by debit or credit card, which is also unique to this program. For traditional gifting, you cannot use a credit card. It has to be sourced
Right.
funds. Um, we talked about the match, which is amazing. There's other ways to raise money as well through this program called Up It, which is linked on your contribution page, and it's essentially a splash page where you can shop through online retailers, and each
Oh,
time somebody shops from your page, you earn a percentage of their purchase back.
oh,
So
wow.
you can also add it as a Chrome extension so that whenever they go to the website, they don't have to necessarily go through your website for you to reap that benefit. But it's a percentage of whatever the sale is, and it ranges from like
Nice.
5% to 17%. And there's retailers like Target, um, Walmart, I think. I mean, it's big retailers, Homes, Lowe's. It's not just,
Places you typically go.
so this is also really good, like when you do your Christmas shopping. That's one way, theoretically, for a buyer
Yeah.
to contribute to their own campaign is to do their Christmas shopping through their Up links. It's not a whole lot, but it's still
It
something.
adds up. It adds up.
Yeah. And all of the Up credits, the social media share credits, and the lender credit that you can get from us, all of that's applied at closing. It's not actually cash that's deposited in that account. It's credited at closing. So you wouldn't get any of those benefits if, like you were talking about, they banked it and didn't buy a house.
Yeah, yeah.
Um, let's see.
Now, question, it's not just for first-time home buyers, correct?
Correct. Mhm.
So is there a limit on the amount of home you can buy with this program? I mean, it's unlikely someone buying $1 million home is going to be using this program, but I didn't know if there were any limits or stipulations.
No, I believe you can use it even for the jumbo program, loan program as well, but typically it's for people who are in conforming loan amounts, and
Beginning.
that's for like the 740
Yeah.
mark on the sales price. Um, Sorry, there was one other thing,
Yeah.
and that was that you can combine it with down payment assistance.
Okay, let's go right into that. Let's talk about down payment assistance because not everybody would be probably comfortable, or maybe they just don't know a lot of people for the home funded program. So talk to us about the other option, the down payment
So,
assistance.
yeah, down payment assistance are programs that help home buyers with basically who qualify for the mortgage but don't have the assets to fund the down payment and the closing costs. There are multiple programs across the state and nation that help with this type of thing. Some of the more popular ones are TSHAC and Seth.
Familiar with that.
We also have an internal down payment assistance program
Oh,
called FHA Buyer's Choice. And this is proprietary to Next Mortgage and its affiliates, parent company, that sort of thing. And it's primarily, well, only for FHA loans. And there are definitely some benefits to it above some of the other ones.
like what?
Primarily, there are no income limits on our internal program, which a lot of the other ones do have income limits where you have to be in a maximum of 80% area median income to qualify for those down payment
Oh,
assistance programs. We don't have that on our FHA Buyer's Choice program. The other benefit is that it bases the amount of the grant at off of the sales price and not off the loan amount. So you're able to get a little bit more money.
oh, good.
Um, yeah, there's no location requirements. You can use it in conjunction with Home Fund It. Um, it's for FHA loans only and goes down to credit score of 620.
Okay, that will help a lot of people. Just to clarify, you did say something, if I remember correctly, it's for people that don't have, they qualify but don't have the assets. You mean the money in the bank?
Yeah, a lot of people qualify credit wise, like their credit scores are high enough,
Mm.
their debt to income ratio is good, their employment is solid, but they're just not able to save money just
Right,
because, inflation and
life.
life is expensive. Yeah. So this is really good for those folks who qualify otherwise, but just don't have the funds to close.
Okay, well, there are definitely a lot of people out there about that. And then you had something, well, why don't you mention the T-Shack real quick?
Yeah, so TSHAC is Texas State Affordable Housing Corporation. I had to look for reference. I was like, I always get it
It's
wrong.
okay. It's a
And
lot of
that's another
acronyms.
down payment. Huh?
It's a lot of acronyms.
Yeah, we mortgage industry has a lot of acronyms, and sometimes it's hard to remember them all. So they're another one. They offer 2, 3, 4, and 5% grants, and this is of the loan amount. You can do it with FHA, conventional, VA, USDA. They do have income limits, but TSHAC is one of the more popular ones. They have see all of these down payment assistance programs go on. They're kind of considered subordinate financing, right? So they're considered second liens. With our FHA Buyer's Choice program, you have two options. You have a forgivable second lien option or a repayable second lien option.
Oh,
Um,
wow.
the forgivable option means it goes away. You don't have to repay it. It just, you have to stay in the house for 5 years and then it just disappears.
Sounds
The
like a good
repayable,
option to me.
yeah, the repayable option, you repay it I think over 10 years. So TSHAC, all of these 2, 3, 4, and 5%, it's a forgivable 3-year lien. So basically it's a lien that sits on your house behind your first mortgage and it just stays there as long as you stay in the house. You don't have to repay it or anything like that. If you
Wow,
refinance, you have to repay it. But as long as you're in that house for 3 years, you don't have to repay
that sounds amazing. I'm sure people will be calling you about more of that.
it.
Now on the T-Shack, am I correct in thinking that they have special programs for like police officers and medical first responders, do they? Or am I thinking of something else?
Yeah, it's the Hometown Heroes program.
Okay.
And then the
Yes.
other one for us regular folk, I guess you could say, is Home Sweet Texas.
Okay, well, I know you also have something Freddie Mac Borrow Smart.
Before we talk about that, though,
Yes, ma'am.
I did want to say that all of those DPA loans, you don't have to be a first-time home buyer for them.
Okay.
Anybody, you can be a repeat buyer. And then we also have, in conjunction with the TSHAC and the Seth programs, we have what's called the Mortgage Credit Certificate. That is limited to first-time home buyers, and the mortgage credit certificate is basically the special tax credit that helps reduce the taxable income that you pay
Oh,
on your tax returns. And it also is a benefit because we can add it to your qualifying income to make your debt to income ratios a little bit better. So that is a benefit that's specifically for first-time home buyers, and you have to apply for it basically.
wow, there's so much to know. For those of you out there that are listening, if you have any questions, just contact Karen. We can't cover everything in a podcast, but we're trying to highlight a lot.
Yes, it's almost impossible, but
Yes,
to make our best.
we'll get it started. We'll get it started.
Yeah. Okay. So the Freddie Mac Borrow Smart, like you were talking about. So these are grants issued by Freddie Mac to very low to moderate income home buyers. They come in 3 different tiers. There are borrowers who are under 50% area median income, borrowers who are between 50 and 80% area median income, and then borrowers who are between 80 and 100% area median income.
Okay.
And it's a grant that's given at closing in the form of a lender credit to help contribute to their closing costs or down payment.
Wow.
This program has to be combined with the Freddie Mac Home Possible program, or for Fannie Mae, the Fannie Mae Home Ready program. And right now, typically it's a $1,500 credit for anybody under 50% of the AMI, $500 credit for anybody between 50 and 80, and then $1,000 for anybody between 80 and 100. But right now, not only Freddie Mac, but also Fannie Mae is giving borrowers, very low income purchasers, a $2,500 credit.
Wow.
So anybody underneath 50% area median income, you can apply for the $2,500 lender credit at closing, and it just goes towards to help cover your
Wow.
closing costs down
Closing
payment.
costs.
And that's for
Okay.
the next year. It's from loans closing and being delivered between March 1st through 2024 through February 28th of
Oh,
2025.
now's the time to buy.
The
That's
tricky part of that,
fantastic.
of course, is finding something, that you're qualifying for. If you have under 50% area median income, that might be the
Yeah,
tricky part, but that's kind of where we shine. So we'll help you.
I know you will. That's why you're here. You're very dedicated on that.
Yeah, the mortgage
Okay.
credit certificate. So it's a certificate. It can only be combined. It can't be combinable with the FHA buyer's choice program. It's just with the state programs, I believe. So it's a tax credit that you get, and it reduces your taxable income by the amount
Okay.
of interest that you pay on the mortgage. So it helps you save with taxes. And then coincidentally, we can also add that amount that you pay in interest. We add it to your qualifying income. So it helps you qualify for a little bit more of a house.
Wow. I don't know how you keep all of this straight.
One of the things we could talk about theoretically is, trying to get folks into homes with no money, basically at the closing table, between home funded, down payment assistance programs, and then seller concessions. And that's not something that's guaranteed ever. That's something that has to be negotiated. Seller concessions.
Absolutely. Yeah.
It is
Everything's
theoretically possible.
negotiable.
Yeah, it's always negotiable. That is theoretically possible to get into a home with no money down. It depends on your market area. I mean, I'd let you speak to negotiating seller concessions, but it is also theoretically a way to get into a house without having really the money to cover the closing costs and down payment. Because a lot of people don't understand too that not only do you have to cover your down payment, which is the 3.5, 5, 10,
Yeah.
20% down, whatever, but you also have closing costs on top of it, and prepaids, which are like interest and escrows, that sort of a thing.
Right.
So when you're
Homeowners insurance, HOAs, and
Yep,
etc.
all that stuff. Yeah. So when you're accounting for how much money you need for your down payment, don't forget about that because it's a huge chunk.
Yes.
Sometimes it can be even more than your down payment. So home funded and the seller concessions are definitely a way to help knock that down a little bit.
Yes, seller concessions, definitely rely on your realtor for that. That's in the contract. Money to go towards closing costs. There are limits oftentimes with lenders. Some say you can't do more than 3% in seller concessions, but we'll address that with your lender. And it's just another, like you said, another way to not have to bring as much money to the table. I will tell on myself here, the first condo I ever bought, being on commission only, it's a little nerve-wracking. So what I ended up doing, and assuming we can still do this, I actually offered more for the house and then I asked for the money back. So it meant I brought less to the table. So I was holding on to some of my cash for any dry spell that may or may not happen.
Yeah,
That
as long
was,
as all of those negotiations are handled up front,
mhm.
um, and the home appraises, I mean,
Oh yeah, that always has to, yeah.
yeah,
Again, talk to your professional realtor and figure out exactly how you can make that work. I'm not saying
yeah,
everybody should do that. That happened to be what I did, and that was many, many years ago. So,
yeah. I mean, like I said, everything is a negotiation.
mhm.
We can't really do that like after the fact, after your,
Oh, no,
the
no, no.
lookups and stuff like that.
It's all got to be
But
in the contract.
yeah, as long as the value's there and the seller's willing to do it, then that's pretty much that's more or less, I mean, how everything works anyway, right?
Yeah,
So,
yeah,
whatever the seller's willing to do and whatever your amazing agent can negotiate, that then, yeah.
great. So we've talked about Home Funded, which is an amazing program. We've talked about the T-Shack. We've talked about the FHA, well, the one with the the down payment
Uh,
assistance programs.
FHA
And
buyer's trust. Oh,
yeah, and then the Fannie and Freddie. So there are a lot of options out there that people just don't know are out there.
hmm. Yeah, I remember when I heard about Home Funded for the first time, it was probably back in 2017. I was working at a different mortgage company. And I remember I was gobsmacked, to say the least. And I reached out to one of my coworkers, associates. I was like, look at this. This is like game changing. This is mind blowing. And then when I came here and I found out that we had it, um, I was like, okay, this is the hill I'm gonna die on. Getting home funded. I was like, "Yeah, why are people not doing this? This is
Yeah,
fantastic. I mean, even if you don't get all of it, I mean, you set it up. I mean, you can set it and people ask you, what do you want for Christmas? Nothing. I already have everything. Go
I want a
donate to Home
house.
Funded. What do you
Help
want
me
for
get a
birthday?
house.
Yeah, yeah. What do you want for your birthday? What do you want for your anniversary? Just go donate to my Home Funded. Like, there's so many opportunities where people
Yes,
give a gift for some reason or another. Secretary's Day, like they can go donate to your to your Home Funded. Um, so I think it's a really powerful tool that
yes,
people should at least try. And I mean,
absolutely.
worst case, you don't get any donations or you just don't get a lot. And, you
It
know,
costs you nothing to try.
no, no, no,
Yeah,
no. And on that note, there are no fees or anything that we take out of it. It's
good.
not like GoFundMe where we keep a percentage or anything like that. Everything that you raise, you get back. There are no weird adjustments to the loan program that you get put on. Um, there's no like pricing adjustments. It's no special program that you have to
Good.
be on to use it. It's just traditional mortgage financing. It's just that your down payment comes from that instead of traditional sources.
Wonderful. I know your company's working on some other wonderful things, which we can't talk about now, but I will have you back on when those are realized and we can go
Yeah.
over that again. But before I forget, Karen Wood, give them your website address. So if they want, I mean, I'm going to have this at the end of the podcast, but if they wanted to contact you prior, how can they do that?
The best way would probably be by email,
Okay.
which is karen.wood@nextmortgage.com, or by cell phone, which is 281-222-5815, but don't prank me.
Okay. Anything else you want to say before we head out?
Um, it never hurts to have a conversation. A lot of people don't know,
What they don't
homeowners,
know.
consumers don't know what they don't know.
Mhm.
I'm big on home buyer education. I'm big on answering questions, and I want people to understand what programs are out there, what's available. If you don't think that you can buy, if you're not sure, let's find out. I mean, it doesn't hurt. Credit check, conversation, a little bit of work, pulling paperwork, and that's it. So um, I've had people who didn't think they could get qualified for anything, and then they did, and then they bought a house, and then it's
Life is good.
yeah, life is good, and it's a wonderful feeling to be able to see that happen in real life.
Yeah.
Um, so yeah, reach out,
I'm
ask me questions. I'm happy to
I'm
help.
glad you brought that up. Yeah, it's never too early to talk to a lender.
Mhm.
Even if you think there's no way, maybe they can put you on the right path to get there faster than you could on your own.
Yeah, that's one of
And
the things I like to do when we work on pre-approvals is if it's a no, it's not a no forever. It's a
yeah,
no, but how do we get on the right path? So we talk about a plan. We look at like credit, financials, savings, like how much they need to save. They know what things they can do to their credit to help get in a better position, maybe in 6 months or a year. So I know a lot of people have come who have worked with other lenders in the past or who have come to me and said that they've had a difficult time because they were just told no and they have no idea why. They didn't know what to do. And they were just like, okay, sorry. But
Yeah.
I try to make sure that we have a game plan in place. So if it's a no right now, it's not a forever. It's a no, but this is how we get to yes. So
Yes.
even if it's a no, we'll figure out how to get to a yes.
Yes. Don't give up just because one person told you no. Give
Mhm.
Karen a call.
Yeah, please.
Okay, well, thank you so much for taking the time to do this today. I really appreciate it. I know there are people out there that didn't know a lot of this. I didn't know a lot of it, and I'm in the industry. Well, not in lending, but in real estate. So therefore, I work with lenders all the time. So I
Yeah.
really appreciate it, and I will have you back on after we get those other programs finalized. If anyone has any questions, please email Karen. Thank you, Karen.
Thank you.
Thanks for tuning in to The Real in Real Estate, your gateway to the source. Be sure not to miss our upcoming episodes loaded with fantastic insights, expert tips, and all the latest trends in the property scene. Don't forget to stay connected with us on our Trilogy Realty Group socials: Facebook, Instagram, YouTube, and even TikTok. Until next time, take care.